The bad bank, backed by the government, will soon be operational as National Asset Reconstruction Company (NARCL) and a step-down asset management company or the AMC. NARCL will buy and aggregate the bad loans from various banks, while a step-down AMC will do the restructuring, turnaround and the resolution work. But setting up a bad bank is not a silver bullet to address the NPA problem given the size of rupees 8 lakh crore bad loan in the system. The stressed loan post-COVID could be as high as 18 lakh crore. Like they said, there are many a slip between the cup and the lip. The bad bank's success will depend a lot on the right structure or the design of NARCL and the AMC. So what are the critical factors that would make or break the new institution? What more needs to be done in terms of reform outside the bad bank to not repeat the NPA problem? Let's cover the 5 key areas. But before moving ahead, do subscribe to BTTV channel for more policy ideas, corporate development, stock market and personal finance. Let's tackle the guarantee element. There will be a guarantee by the government to investors of bad loan assets. The government assurance would come by way of promising a minimum return on their investment in security receipts, which are part of the sale consideration. Why a government should give a guarantee to investors? First, a government-owned bank gives a loan to a private enterprise, and when it turns bad, the government again steps in by giving a guarantee to new investor who is buying the bad loan. They are indirectly guaranteeing the bad loan of private enterprises. This will set a bad precedent in the market. Second, there has to be a sunset clause. The bad bank has to be for a specific purpose with a timeline to resolve the bad loan. The NARCL should buy bad assets from banks for a specific period, say for the next 2 years, and then set a mandate to complete the resolution by 5 years or a maximum of 10 years. NARCL should not take up any other job than resolving the bad loans. Take for instance the Chinese AMC for bad loans got into stock trading and other activity, and even after 20 years the final resolution is not in sight. The Swedish AMC had a good track record of recovering close to 90% of the bad loan bought by it in the shortest possible time of 6 years in the early 90s. Valuation is another critical area. The banks plan to sell the bad loans to NARCL at a book value, but the real value of assets could be higher or lower. The banks plan to sell the bad loans to NARCL at a book value, but the real value of assets could be higher or lower. Banks generally have different types of securities or collateral, which if they invoke will realize a much higher price than in an ARC or AMC setup. The banks should use proxies like resolution in the same sector. Take for example, the average recovery in the steel sector is in excess of 35 to 40%. The new NARCL and AMC could face big challenge on the resolution side. ARCs mostly have expertise in financial restructuring. They need people with business restructuring experience. Sector expertise is also very important, especially in areas like power and infra, which will be contributing most to the bad loan stock of NARCL. AMC will need professionals in the management as well as an independent board, and not former bankers and people on deputation from public sector banks or the government. It also needs strong governance practices and transparency. Last but not the least, the government needs to start reforms in the public sector banks, which is the root cause of higher bad loan in the banking system. The government should professionalize the PSB board, allow lateral hires in weak areas like risk management, credit underwriting and loan recovery. Initiate HR reforms, performance management, training and development. Clearly, a successful bad bank not only needs a right structure and design, but also require nipping the bad loan problems in the bud by reforming the PSBs.